A 35-minute YouTube script is type I. What if the next major move in the precious metals market isn't gold, but silver? For years, silver has lived in the shadow of gold, often overlooked by mainstream investors and ignored by financial media. Yet today, a growing number of analysts, institutional investors, and market watchers are asking a question that seemed impossible just a few years ago. Could silver be on its way to $100 per ounce? While that target may sound extreme, the factors driving the silver market are becoming harder to ignore. Rising industrial demand, shrinking supply, increasing geopolitical uncertainty, and growing concerns about global debt are creating conditions that some experts believe could lead to one of the biggest silver rallies in modern history. In this video, we'll explore what's happening behind the scenes, why silver has suddenly become one of the most closely watched assets in the world, and whether a move toward $100 silver is actually realistic. To understand where silver could be going, we first need to understand where it has been. Silver has always been a unique asset because it serves two very different purposes. On one hand, it is a precious metal used as a store of value and a hedge against economic uncertainty. On the other hand, it is an industrial metal that plays a critical role in manufacturing and technology. This dual identity makes silver unlike almost any other commodity in the world. When economic uncertainty rises, investors buy silver as protection. When industrial activity increases, manufacturers need silver for production. In both cases, demand can increase significantly. This unique combination is one reason why silver often experiences explosive price movements when market conditions align. Over the past several years, global demand for silver has been growing steadily. One of the biggest drivers has been the rapid expansion of green energy technologies. Solar panels require significant amounts of silver because of its exceptional electrical conductivity. As governments around the world push for renewable energy adoption, solar installations continue to break records. Every new solar project creates additional demand for silver. Industry reports have shown that solar demand alone now accounts for a major portion of global silver consumption, and that number continues to rise each year. Unlike some commodities that can easily be substituted, silver remains extremely difficult to replace in many high-performance applications. The electric vehicle revolution is creating another major source of demand. Modern electric vehicles use more silver than traditional gasoline-powered cars because silver is essential for electrical connections, power management systems, and advanced electronics. As automakers invest billions into EV production and governments encourage the transition toward cleaner transportation, silver demand from the automotive sector is expected to remain strong for years to come. Every new electric vehicle rolling off an assembly line contains a small but important amount of silver. When millions of vehicles are produced each year, those small amounts add up quickly. But demand is only one side of the equation. Supply is becoming an increasingly important story. Silver mining production has struggled to keep pace with rising demand. Developing a new mine can take many years and requires enormous capital investment. Environmental regulations, permitting challenges, political uncertainty, and rising operating costs have all made it more difficult for mining companies to expand production. As a result, the silver market has experienced multiple years of supply deficits, meaning more silver is being consumed than is being produced. When supply fails to keep up with demand, prices often move higher over time. This supply-demand imbalance has caught the attention of investors around the world. Many analysts believe that the market is underestimating the severity of the silver shortage. While above-ground silver inventories still exist, much of the silver used in industrial applications is not easily recycled. Unlike gold, which is often stored and preserved, silver is frequently consumed in products and technologies. Once it enters certain manufacturing processes, recovering it can be expensive and impractical. This means a significant portion of the world's silver supply effectively disappears from the market over time. Another factor supporting the bullish case for silver is the global economic environment. Around the world, governments continue to carry massive debt burdens. Central banks have spent years expanding their balance sheets and injecting liquidity into financial systems. While these policies helped stabilize economies during periods of crisis, they have also raised concerns about currency depreciation and long-term inflation risks. Historically, precious metals have performed well during periods when investors lose confidence in paper currencies. Silver, like gold, has often benefited from these concerns. Inflation remains one of the biggest topics in global finance. Even though inflation rates have moderated from their peak levels in some countries, the cost of living remains significantly higher than it was just a few years ago. Many investors continue to look for ways to protect their purchasing power. Precious metals have traditionally been viewed as a hedge against inflation because they cannot be created at will by governments or central banks. As a result, any renewed fears about inflation could increase investment demand for silver. Geopolitical uncertainty is another powerful catalyst. Conflicts, trade tensions, sanctions, and political instability often push investors towards safe haven assets. Throughout history, periods of uncertainty have frequently led to increased demand for precious metals. Today, the world faces numerous geopolitical challenges, from ongoing regional conflicts to strategic competition between major global powers. These developments create an environment where investors may seek protection in assets that have historically retained value during turbulent times. One of the most fascinating indicators in the silver market is the gold-to-silver ratio. This ratio measures how many ounces of silver are needed to buy 1 ounce of gold. Historically, the ratio has fluctuated dramatically over time. When the ratio becomes extremely high, many investors view silver as undervalued relative to gold. In recent years, the ratio has often remained well above historical averages. Some analysts argue that if the ratio simply returns to more normal levels while gold remains strong, silver could experience substantial gains. Imagine a scenario where gold reaches new record highs due to economic uncertainty, central bank buying, and global demand. If silver begins to catch up and the gold-to-silver ratio narrows, the price appreciation could be dramatic. This possibility is one reason many investors are closely watching silver today. They see not only the potential for gains driven by industrial demand, but also the possibility of a powerful revaluation relative to gold. Institutional interest in silver has also been growing. Large investment funds, wealth managers, and sophisticated investors are increasingly paying attention to the metal. While retail investors often focus on short-term price movements, institutional investors tend to look at long-term trends. Rising industrial demand, persistent supply constraints, and macroeconomic uncertainty create a compelling investment narrative. If institutional capital continues flowing into silver, it could provide additional support for higher prices. At the same time, silver remains a relatively small market compared to many other financial assets. Because the market is smaller, large inflows of capital can have an outsized impact on prices. This characteristic is one reason silver is known for its volatility. While volatility can create risks, it can also create opportunities. Historically, silver has often experienced explosive rallies once momentum begins to build. The question now is whether these factors are strong enough to push silver toward the highly discussed $100 level. Some analysts believe that reaching $100 would require a perfect combination of strong industrial demand, ongoing supply deficits, rising investment demand, and continued macroeconomic uncertainty. Others argue that silver could reach that level much sooner than many expect if a major catalyst emerges. Either way, the debate is becoming increasingly intense as market conditions continue to evolve. So, what would actually need to happen for silver to reach the psychological $100 level? To answer that question, we need to look back at history. Silver has surprised investors many times before. During major bull markets, the metal has often moved much faster than gold. While gold tends to attract attention first, silver frequently follows with even larger percentage gains. This is partly because the silver market is much smaller and more sensitive to changes in supply and demand. When investment demand begins accelerating, prices can rise rapidly in a relatively short period of time. Many investors remember silver's historic rally in 2011 when prices approached $50 per ounce. At the time, concerns about inflation, economic uncertainty, and aggressive monetary policies fueled strong demand for precious metals. Although silver eventually pulled back, that rally demonstrated how quickly sentiment can change. The lesson from previous bull markets is that silver often remains quiet for long periods before suddenly making powerful moves that catch the majority of investors off guard. Today's market environment differs from 2011 in several important ways. Industrial demand is significantly stronger than it was a decade ago. Solar energy installations have expanded dramatically. Electric vehicle production continues growing, and advanced technologies require increasing amounts of silver. Unlike previous rallies that were driven primarily by investment demand, the current silver market benefits from both industrial consumption and investor interest. This combination creates a potentially powerful foundation for higher prices. Another factor that could support a major silver rally is central bank activity. Over the past several years, central banks around the world have been accumulating gold at a rapid pace. While central banks generally do not purchase silver in the same quantities, their actions send an important message to investors. When central banks increase their exposure to precious metals, many market participants view it as a signal that concerns about currency stability and financial risks remain elevated. This often encourages additional interest in the broader precious metals sector, including silver. The investment landscape is also changing. Younger investors are increasingly looking beyond traditional assets. Rising debt levels, concerns about inflation, and uncertainty surrounding global markets have encouraged many people to diversify their portfolios. While stocks remain popular, some investors are exploring alternative assets, including precious metals. Silver benefits from being more affordable than gold on a per-ounce basis, making it attractive to a wider range of investors. This accessibility can become important during periods of heightened market interest. Some analysts believe silver is currently undervalued relative to its long-term fundamentals. They point to the growing gap between industrial demand and available supply. In many commodity markets, persistent shortages eventually lead to higher prices as producers struggle to meet demand. Silver may be approaching a similar situation. If industrial users begin competing more aggressively for available supply, prices could experience upward pressure even without a significant increase in investment demand. Now imagine a scenario where investment demand increases at the same time industrial demand remains strong. This is the scenario that excites many silver bulls. Investors seeking protection from inflation, economic uncertainty, or currency weakness could enter the market while manufacturers continue purchasing silver for production needs. With supply already constrained, the resulting demand surge could create conditions for a substantial price increase. Of course, no investment moves in a straight line. Silver remains one of the most volatile major commodities in the world. Sharp corrections can occur even during strong bull markets. Investors should understand that volatility is part of the silver story. Large gains are often accompanied by significant pullbacks. This volatility can test investor patience and confidence. However, history suggests that long-term trends are often more important than short-term price fluctuations. One of the strongest arguments for higher silver prices comes from the mining sector itself. Many silver mining companies face rising production costs, labor expenses, energy prices, equipment costs, and regulatory requirements have increased over time. For mining companies to justify expanding production, silver prices may need to remain elevated. This creates a natural economic incentive for higher prices over the long run. If producers cannot earn sufficient returns, new supply may remain limited. There is also the possibility of unexpected catalysts. Financial markets are often driven by events that few people predict in advance. A major economic slowdown, a banking crisis, renewed inflation concerns, geopolitical tensions, or significant shifts in monetary policy could all influence investor behavior. During periods of uncertainty, precious metals frequently attract attention as safe haven assets. Silver could benefit substantially if global risk levels increase. Some forecasts suggest that reaching $100 silver would require a major bull market comparable to some of the strongest commodity rallies in history. While such a move may seem ambitious, it is important to remember that financial markets often exceed expectations during extreme cycles. Assets that appear overvalued can become even more expensive, while assets considered undervalued can remain overlooked until sentiment changes dramatically. For long-term investors, the key question may not be whether silver reaches exactly $100, but whether the current fundamentals support significantly higher prices over time. Growing industrial demand, constrained supply, inflation concerns, and geopolitical uncertainty all provide reasons for optimism. Even if silver does not immediately reach triple digits, many analysts believe the metal could continue benefiting from these powerful long-term trends. As we look ahead, investors will be watching several important indicators: supply deficit reports, solar energy growth, electric vehicle production numbers, inflation data, interest rate decisions, and movements in the gold market will all provide clues about silver's future direction. Each of these factors has the potential to influence market sentiment and price action. The road to $100 silver may not be smooth, and there are no guarantees in financial markets. However, the discussion itself highlights how dramatically the silver story has changed. What was once considered a niche precious metal is now becoming a strategic resource for the modern economy. Whether driven by industrial demand, investment interest, or global economic uncertainty, silver appears positioned to remain one of the most closely watched assets in the years ahead. And that brings us to the biggest question of all. Are we witnessing the early stages of a historic silver bull market, or are expectations running ahead of reality? The answer may determine not only where silver goes next, but whether today's investors look back on current prices as a once-in-a-generation opportunity. One thing is certain: the silver market is evolving rapidly, and the next major move could arrive sooner than many people expect.